JFD, just fair and direct.
Okay, hello and good morning everyone, and welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 13th of January 2023, so yeah, welcome everyone. Welcome to this Friday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we continue, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation. It should not be considered as such and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, a quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our jfdbrokers.com website, which you can always check out for more information about us. So, now then, guys. Let me clear up my throat a little bit, and then yeah, we can start. So Nikkei 225. Well, look at this one. Basically, it declined. It moved lower. Yesterday, we saw the US indices actually gaining a little bit, but not much. But the Asian session today, yep, it felt the heat. I think that there was some bad data that came out. Yeah, the China imports plunge in December, so kind of showing a slowdown in trade. And yep, Nikkei drifted to the downside. However, on the positive note, it remained above this upside support line. So it broke it nicely to the upside. Initially, traveled higher, almost came close to this 21-day EMA, and then drifted back down. Now, and it's currently getting a hold up here. Now, let's rearrange these arrows a little bit. So my downside scenario will come from around here somewhere, from a break below this whole support zone. Let me actually just highlight that for our future reference. There we go. So yep, so that's going to be my downside scenario for the upside. Now the upside is it's still not off the table, so if we continue to hold up somewhere above this upside line, something like this could happen. And some of you are already saying, hey, maybe we have an inverted head and shoulders pattern. Well, guess what? I mean, you might not be wrong. However, it's too early to talk about that. And if you remember, in one of my previous instruments, I also talked about the idea of a head and shoulders, but it didn't really work out. I think it was Shanghai Composite. Yep, but it didn't work out because we always have to wait for that kind of confirmation in order to kind of get excited with the pattern. So in this case, look, maybe it could end up being an inverted head and shoulders pattern. Let's wait and see. But I would prefer to wait for a break below through the neckline first in order to go higher. So then my neckline could be on this downside line here, taken from the high of the 27th of December. However, if we have to draw it, let's say a little bit better, then this is the one to watch. So something around these lines basically. So yeah, if we clear this, if you want to remain kind of, you know, on the more of a careful, if you want to kind of have that careful approach, well, look guys, you can just wait for a push above that 26,620 territory. I spoke about that level. If we clear that, we also push above the 21-day EMA. So keep that in mind. Now, Shanghai Composite very quickly. So yeah, if you remember, this is the head and shoulders that I was talking about. So initially, I was kind of you know, talking about this being the left shoulder. This is the head, and kind of I was saying, hey, let's see how it's going to play out near these EMAs, because maybe it's going to form the right shoulder. So, but instead of that, it cleared it, and now we're aiming higher. With this one, the issue is that we're currently testing the 200-day EMA, and as we can see here, historically, it did provide resistance. So, overall, of course, I am a little bit more on the positive side, but not too much to the upside. But here you can see that we have nicely rebounded from this area. I talked about this as well, so we did rebound, so that's great. But we're now currently getting a hold up near that 200-day EMA. So this is where my problem kind of lies, because in order to go higher, yes, a break of this 200-day EMA is needed, and not only like a false breakout like we had here twice, but actually we would like to see the daily candle staying above this area. If we do stay above it, then yes, I will go towards that 3,226 territory initially. After that, I will take a careful approach, because what I want to see here is, will we form a range or not? So, you know, that's why I don't want to rush into anything yet. So for now, I'm just kind of monitoring this situation right here. The S&P 500. So a good move yesterday to the upside. Initially we sold off, but we managed to recover. The bulls managed to push this one back up. However, as you can see here, the 200-day EMA provides resistance, together with that 3,990 territory. Now, of course, don't get me wrong, we did end up almost reaching that psychological 4,000 mark, but if you remember, I said that in order to go higher, yes, I need to see a nice good strong push above this area, above that psychological 4,000 mark, and I would like to see the index staying above it in order to get comfortable with this move further north. Until then, I'm just observing the price action. This highlighted zone, by the way, can go, I think it's a little bit in the way. Yes, it's a good level, but I think the line will be enough. The thing that you need to kind of keep an eye on here is, I think, this. So this whole territory between the 3,878 and 3,912, or roughly 3,900, basically it dropped below that 3,900 territory, may do the trick for a few more sellers here. As long as it's going to be trading somewhere here, I am just observing the price action, and I'm a little bit on the neutral side. And the reason why I'm talking about the 3,900 level as well is because if we drop below it, we would also be placed below all of the EMAs here on our daily chart, which could be seen as a bearish indication. NASDAQ 100. So, good hold up. Previously I talked about this one. I talked about this 21-day EMA. I said that if it holds, another decline here could be possible, but if it breaks, we could go higher. But I think that, look, a few adjustments have to be made here. First of all, of course, we are looking at 11,450 right here. If we manage to clear this, then yes, I will go further north. I will aim for that 100-day EMA, and if we clear that, then yep, so on and so on. Of course, that's logical. But let's not rush into anything, guys. I mean, at the moment, it's a bit of a tricky market here. On one hand, yes, the positivity is kicking in, great. Everybody's enjoying the moment. However, not everything is so, you know, nice and dandy kind of. So you have to kind of be very careful and cautious with that. So yeah, guys, at the moment, I would say we are positive. That's great, somewhat. But don't forget that, yeah, it could change very quickly, and in general, of course, we're watching. In general, look, everybody's talking about the recession, and you know, and the 2023 recession. Look, it has room. It has kind of place. It could happen, basically, and our numbers in general, the economic numbers, are not getting better, and the Fed continues to increase rates. So look, everything's kind of, it seems like it has to be created even artificially, even if there is no maybe kind of place for that, or let's say if there is everything seems to be okay still. It seems like the market needs a restart, like a huge restart, and I think that this is what all these central banks are trying to do right now. I think that they're trying to restart it because again, everything's very expensive, very pricey. And the only issue, the only option that they always see in all this is to kind of create unemployment and kind of raise rates and slow this way they can slow down the economy. Well, let's see how all this is going to play out, of course. That's why I'm saying that, hey, on one hand, everything's kind of looking quite interesting, but on the other, don't rush into anything. I mean, it is an interesting moment right now, but I think that we could still end up drifting lower at some point. But hey, looking at the bigger, broader picture here, I think that we could go a little bit higher here. However, let me just put this on the chart very quickly, something like this. So look, we have this downside line. So basically, in a way, if we refer to this downside line, you can see how much more room we have here for the upside. And I think it would be reasonable to say that if we break this downside line, which is taken from the high of the 28th of December, then yes, we could go further north here, maybe even towards that 14,000 mark again. But if we struggle, then guys, I mean, we have this downside line. Keep an eye on it, and we could go a little bit more to the upside here, but don't get your hopes up too much. So basically, long story short, something like this could be possible. There we go. Let me just put this. There we go. Yeah. So the DAX German Index. Yeah, we pushed nicely. And look, I mean, the idea worked out nicely yesterday. I talked about this, and I said that, hey, if we do clear that 15,000 mark, or in general that 14,920. Then yes, we could go further north. Well, at the time when I was talking about this, we were already above it. We were above that 14,925 territory, and I said that if we stay above it, then yes, a further move north could be possible. Well, and especially if we also clear the 15,000 mark. So we did that, we stayed above it, and now it seems like yes, it wants to continue going further north. Look, at this point, again, I get it. We are looking for a bit of correction here. However, it could still push up here. It could still go higher, and we could still see, like maybe a move somewhere towards that 15,300 or even above that. But of course, we haven't received our reversal signal yet, so just keep that in mind, and that's why it could still go further north. Gold, guys, gold. Look at this new move yesterday. Of course, yesterday the CPIs came out, and we all saw that, and it came out in line with expectation. Well, at least the headline one, the headline year-on-year number. Let me just remind that. I think it's 6.5. It was. Just bear with me. Yeah, 6.5. The year-on-year December CPI headline one. The core one also was in line with expectation, the 5.7. So yeah, everything was in line. Gold had initially a huge decline on the news, and then it ripped and it pushed higher, and it cleared that 1870, or actually it was already above that. It moved further away from that 1879 territory. At one point we did get a move back to that 1879, and then yeah, it kind of pushed back up again. So look, everything's looking quite positive still. I talked about this commodity, and I said that if we stay above this 1879 territory, my next target, I think this arrow is way too ambitious here. My next target is the 1910 zone. So we did reach the psychological 1900 level yesterday. We got a hold up there, and we drifted back down. Today we're kind of trading slightly below it, but to be honest, I am kind of hoping to see a further move north, especially if we clear that 1900 territory. If we clear that 1900 territory, my next target is the 1910. WTI oil very quickly on this one, and yeah, this one is interesting. It did have a move, but not significant one. So look, I will stick to my rule that in order for me to go higher, I need to see a push above somewhere above this 82 territory for the downside. A drop below the 72.50 would be required. DXY, the dollar index, boom, there we go. Drifted nicely to the downside, further away from that 103.45 level. And yeah, my next target here is this 101.30. I talked about this level previously. Look, I talked about this falling channel as well, but I think it's time to get rid of it because I think it's easier to just monitor the levels at this point because we got the violation of the upper side of that falling channel. Now we are seeing kind of a decline, a move back down. We dropped below that 103.45, so now I am aiming for that 101.30 as long as we remain below that 103.45. If we somehow climb back above it, actually I think this arrow has to go this way, and then yes, I'll go to the upside if we do push back above the 103.45 level. Litecoin, one of my favorite ones lately. This one managed to clear that 83.75 level, and we managed to remain above that area as well. So look, if you're looking for some higher levels, I would say as long as we stay above that 83.75 level, if we remain somewhere above that area, then yes, we could go further north, maybe even towards that 100 level. But if we start falling back below this, I think this could be quite interesting later on. So yeah, if we do fall back below this, then I will consider a move back to at least to that 21-day EMA, wherever it will be. At this point, it's roughly around that 76 mark. But maybe it could go even further south. But again, let's wait and see. But at the moment, I'm not saying that I am very bullish here. Look, we had a good run. That's great. We, had if you managed to capture this, that wonderful. Congratulations. Because I talked about this previously, and I said that if we do clear this 73.30 territory, then yeah, I'll go higher. And look at this, we did. We did go higher, and we did move nicely to the upside here. So yeah, at this point I would say wait for it, wait for maybe for a better opportunity, and that opportunity could come if we can continue to trade somewhere above this territory right here, above that 83.75. AUDJPY, look at this beautiful move here. We had a rejection near this downside line again, and well, not again, but yesterday we had a rejection here and it dropped lower. And look at this, I talked about my downside scenario. Let me just grab this arrow. I said that, hey, if we do fall below that 89.82 territory right here, I'll move to the downside. As long as we stay below it, I will aim lower. Ideally, I would like to see a move towards this 87.3, 87 level in general. So, but if we kind of find support somewhere around here, maybe, then of course be careful. Look, the next big obstacle on the way lower here, for example, something that you probably would need to keep an eye on, is this inside swing high of the 3rd of January near the 89.32. And if we clear this one, then yes, I will go further south. But if we struggle, maybe a rebound back up here could be possible. So keep that in mind. AUDUSD, guys. So looking at the picture here, the upper side here. Look, I mean, I talked about this. It's not really something like of a formation. I mean, it's not an ideal formation because this is just random lines, I would call it. I don't think that we should kind of even consider this as a main thing here, because the only thing is what I said yesterday to you, that look, I'll keep this upside line because I want to see if this is gonna act as a nice good area of resistance, and so far it seems like it's doing the job. We did move back to the upside. I said that if we stay above this 0.6860 territory, then yes, we could continue pushing further north. For the downside, I need to see a drop at least below the 200-day EMA in order to consider a move to the downside. AUDCHF. So I haven't looked at this one for quite a while, guys, and yep, last time I looked at it, that's why I have my arrow skewed here a little bit. Last time I looked at it, I said if we break this downside line, I'll go lower. I'll go higher, and I'll aim for that 0.6454 territory right here, which we managed to reach. That's great, mission accomplished. Now what's next? Well, we broke it. We broke it, and that means that there is a chance for this one to move higher. However, given that we already had quite a decent up move here, the 200-day EMA is in the way, so if we could see a bit of a push here higher, be careful with the 200-day EMA. It might provide a resistance. If it breaks, then yes, this is where we will start aiming higher. But at this point, look, I mean, I'm kind of considering maybe to see something like a bit of a retracement, ideally. And maybe somewhere to here. Let me just see if this makes any sense. It's a very tentative line, I would say. Okay, could be the case, but if not, then maybe we could start, drawing something around here. Look. I would say these two lines, don't really focus on them too much, because again, this is something that I'm trying to see here. Maybe it's not actually, maybe it's just totally pointless. But the thing is that what I'm considering here is maybe to see a bit of a push here towards that 200-day EMA. If it holds, then a bit of a retracement here could be possible, maybe towards one of these lines, hopefully. But if not, then maybe it could just find support somewhere near the EMAs, the 100 or the 21-day EMA. And if it holds, then a rebound and a push, to the upside. So, but if it starts falling below the something, yeah, I think this way is the best. I think I'm gonna remove this one. Just bear with me. Yeah, I think this is gonna be a little bit more accurate. So, and actually makes a little bit more sense. So this upside line, I'm going to keep it for now here. If we break through it, that means we would break below the 21-day EMA, and we would be placed below all of the EMAs here on our daily chart, and that means that, yep, we could see a bit of a decline. USDJPY, guys, there we go. Drop below the 130.40 level, and what I said to you yesterday, that if we fall below this area, I will go lower. As long as it stays below the 130.40 level, I'm going to continue aiming for my 126.36 level right now. So we're just kind of, I wouldn't even say we're halfway. We're about 45% on route here, so towards that level. Let's see if we can reach that. If we start pushing back up here, back to the upside, well, I think I need to draw a new trend line here, and I think it's going to be very, very tentative, because, I mean, this way I cannot draw it, and I think I can draw it this way. Look, it's something, just for, like, to monitor, just to kind of give you that extra confirmation maybe, but my main confirmation will be on if I get a break above this 134.50 level. If we push through it, then yes, I will go to the upside. USDCAD, guys, looking at this, resting on the 1.3357, so that means that it's the bears are kind of still in control, but the bulls are not giving up. So we want to see a nice good move below this area in order to go lower towards that 100-day EM, the 200-day EMA, and maybe one of these levels as well. The 1.3224, the 1.3208 could be a nice target here. But again, confirmation break here is needed for the upside. Now, for the upside, I think I can redraw a few levels here. This was a good level previously, but to be honest, didn't really work out. The 1.3522. I think I'll mark for our short-term analysis here. I'll mark this 1.3459. If we clear it, then yeah, I will go to the upside, a little bit to the upside, not significantly, but a little bit to the upside. If we do push back above this 1.3459, GBP and ZDs. So I think we got a bit of news from UK. Just bear with me one moment. Yep, GDP figures from UK, guys. So GDP month on month plus 0.1. Expected was minus 0.3. However, the previous one was plus 0.5. So it's still a decline. Yes, it's better than the forecast, much better, because at least it's in the positive territory, but it's definitely worse than the previous one. Same story with the GDP year-on-year number. Now, well, actually the same story. Not really, but close enough story, because the previous number was plus 1.5. The expectation was for plus 0.3, so that's way already on the lower side. And the actual came out at plus 0.2. So that's a bit of a problem, I would say, because, it's coming, of course, coming closer to zero. And look, last time we were below. Last time we were below zero was back in September of 2021, but for almost the whole 2020 we were well below zero. So if you remember, that was the COVID time, lockdown time, and yeah, and now we're kind of out of it, but we're getting back below. Or should I say below? We're trying to get back below the zero. It seems like we're trying to do that. So the question here is, will we get there? And if we do, we do that very quietly, then, well, guys, I mean, this is what I was saying before in the beginning of my video, where this is where everybody will start talking even more about recession. That oh my god, So yeah, this is where all the whole sentiment can start changing. At the moment, we're kind of still okay-ish, but later on in the year, I think, guys, prepare for some negativity. Again, maybe I'm gonna be wrong. Hopefully, I'm gonna be wrong. But it seems like, yeah, we are on a bit of a downtrend, a good downtrend. So, and the trend is not broken yet. So unless some sort of magic will happen. But I think that yeah, we're getting kind of to that downside very, very quickly. So coming back to GBP and ZD, look, I mean, we did get a reaction here to the upside. We did put not significant one, but just we pushed higher. We're still within this falling channel, guys. I mean, I will say that look, I will stick to the same game plan. A break through the upper side of this falling channel would be seen as beneficial here. The only problem here is that a similar story as with was it DXY? Yes, the same story. We had a falling channel here. We broke it to the upside. We tested the 21-day, the 200-day EMA, and then we reversed back to the downside. So look, similar story could happen here. We could see, a push higher, a test of the 100 and the 200 days day EMAs. If they provide resistance, another decline here could be possible. So do not exclude this scenario. GBPUSD very quickly. So this one's kind of flat and not really doing much. So okay, yeah, it's above all of the EMAs here on our daily chart. So as long as it stays above all that, I will continue slowly aiming to the upside. But given that it's not really pushing that much, so that's where my concerns are coming from. Like it's not really, it seems like it's not willing to go higher, at least, or maybe it needs a good catalyst in order to see a move to the upside here. But at this point, I would say, look, I'll take a very simplistic approach. As long as it stays above all of the EMAs here, I will continue aiming to the upside towards that 1.2444 level. If it falls below the 1.19 territory, that's from where I will consider a move lower. Euro against the Turkish lira, guys. So if you remember a while ago, I talked about this, and I talked about this 20.01 territory, approximately around here, and yeah, we broke it. We broke it to the upside, and look at the move here. Good move. Yeah, the question now here is, can we see a move to our all-time high, which was reached back in December of 2021? If we do get that move, great. We could see, like a nice, a hit here, and maybe even, and we could see an overshoot. This, by the way, this movie is 120.60. That's where this level is, roughly around there. Maybe your charts would show something different, but roughly around here, 20.60 could be that next target, guys. Keep an eye on it. We broke the barrier here. Let's see if we can travel all the way here towards that 20.60. Look, and this is where I think I've mentioned this already in one of my previous videos. Look, whenever we get in a very short period of time, we have this drastic move, that's when everybody starts talking about it, everybody's ringing alarm bells. However, if we gradually get over a few years to the same level, that's okay, that's normal, that's fine. Nobody's kind of ringing any alarm bells. So yeah, talk about perception. But anyway, of course, I understand, that it takes a longer time, people adjust, that's all understandable. Anyway, coming back to this here, in order to consider some downside, well, this is always a problem with pairs like that, the downside. Yeah, we call them corrections. We call them corrections before another possible leg of buying. So here, yeah, I would say be careful at the moment. We're not getting that signal for the downside. It could still continue popping higher. It is right now on a, it's turned on. It's kind of moving nicely. It's moving higher. So be careful with this, guys. And let's wait and see. Let's wait and see what's going to happen here. EURGBP, one of my least favorite pairs. And yep, so far, I think I need to redraw this very quickly. I think I'll take a careful approach here and remove all the drawings and start fresh. So first of all, this barrier, I'll bring it back to life here, the 0.8866. Look, we cleared it and we stayed above it. So in a way, it seems like it wants to go higher. We have this barrier, the 0.9278. This is when the euro managed to get closer to the pound. I mean, this was the September moment, in 2022, last year. We had a good rally here, a good spike. Almost came to parity, but yeah, quickly reversed because I think it was to do with the whole budget, with the taxes in UK. A new plan was proposed, and it quickly put the pound down. But I think after a day or two, they reverted. They said they scrapped the plan, and this is what, this is the tax plan, and this is what happened here. It drifted nicely to the downside. So if you managed to capture this manipulation, fantastic, guys, well done. If you didn't, well, let's wait for the next manipulation from any government, basically. So, and then we'll see, what can we do here? Anyway, for the downside, guys, I would prefer to wait for a drop below the 0.8770, somewhere around here, in order to consider a move lower. EURCHF, just a quick update, just to see where we are at. And look, I mean, I talked about this. We broke the barrier, the 0.9957. I said that if we're going to break that, I'll go higher. My next target was reached, the 1.0046. We pushed above it. Look, I'm going to say put it very simple, in a simple form. If we stay somewhere above this 200-day EMA, I will continue aiming to the upside. My next target is the 1.0220, and then we will take it from there. And finally, EURUSD, guys. So looking at the picture here, I would say if we stay above this 1.07, where's that barrier? 1.0736. I talked about this because that was my upside scenario. If we stay above it, I will continue aiming to the upside. For now, yep, everything is looking quite positive still, unless we start falling back below this area, back below this hurdle, the 1.0736, and then yes, I will consider maybe a bit of a decline here. So guys, that's it for this session. I really hope you found it useful, and thank you very much for watching and listening. Thank you very much for tuning in. I really appreciate your views, your likes, your comments, and in general, I really appreciate your time, guys. Thank you very much for joining in. So if you want to catch me on Monday, as always at my Traders Espresso, that's 7 o'clock GMT time. For now, guys, I hope you'll have a fantastic trading day. Stay safe today. Today's day is not the most maybe active here in terms of economic data. We still get a few pieces, but yeah, it might be a little bit on the quiet side unless something else starts coming out. Nothing, maybe not economic calendar related. But yeah, guys, I hope you'll have a fantastic weekend, and I'll see you on Monday. Thank you very much, and bye-bye.